My name is Robert Sofia. I'm the CEO of Snappy Kraken, and I have with me Sean Brown, the CEO of YCharts. Thank you for joining us, Sean.
Thank you for having me, Robert.
Now, recession marketing is something that obviously was a topic many were interested in because of the nature of the environment that we're in right now. Why should you even listen to Sean and I? I think that's a fair question. So just a little bit of background. For those of you who don't know, I actually started in this industry back in the early 2000s. 2007 to 2009 was when I broke away with a couple of advisors and started a practice from the ground up. It was actually June of 2007. So you know what happened in October. And we grew assets by 300 million over 3 years between 2007 and 2009. And you know, our assets under management grew fastest during that period. We continued to grow after getting total AUM up to almost $1 billion before I left and started a marketing firm. But that growth period was phenomenal because of one reason. When there's uncertainty, people want answers. And that is why this is a phenomenal time to market, and not to dismiss the fact that recessions create hardships on people. It's absolutely true. And we don't want to take advantage of that in a wrong way, but there's a lot of people who need help. And the way an advisor can help them can determine whether they are successful in weathering the storm or not. So that's what we're in business for. That's exactly what you want as advisors. So how can we help more people during a time like this? And Sean, maybe you could just briefly share a little of your background and why you're qualified to speak to this topic today.
Yeah, I've been in the fintech space for 30 plus years now. And my passion is, how can a technology be applied to help advisors, broker-dealers, and asset managers solve their problems? And this topic in particular is very poignant for me because I was at a dinner party 2 weeks ago, and a friend said, I'll be darned, my portfolio last year returned about negative 14%. And I didn't hear from my advisor anything but I got a bottle of wine at the end of the year and some statements. And he said, Sean, who helps you with your money? And asked around the table who helps with their managing their money. And I said, wow, it's a powerful topic.
Well, that's brutal. That must have been an expensive bottle of wine to make up for 14%, or he had a really small portfolio. Yeah, either way. Well, let's just put a fine point on this. We just did a study of 800 high net worth investors and people who were earning between 200K and 500K a year. And we asked them a lot of questions, but this is the one that's especially relevant to this topic today. We asked them if they would consider hiring a new financial advisor. 52% said yes, 52%. Now that means, according to this study, the majority of people who are working with an advisor, high net worth, right now would consider changing. Now, that guy who got the bottle of wine after a 14% drawdown is one of these people. There's a lot more of those people. And the difference between your clients staying with you, not being one of those people, you want your clients in the 48%, and being the advisor position to capture those clients who are in motion, that other 52%, is the difference between having a banner year or banner years ahead or having a practice that shrinks. And so the entire conversation, the points we're going to share with you are specifically related to this: keeping your clients and capturing new ones. I'm going to share the specific tactics we used in our business during that period to grow. And Sean is going to share specific examples that are very similar to things that we used to put in front of our clients at that time to help us grow. At the root of all of this is this question. This is what people are wondering. They're looking at the news. They're not getting clear answers. Nobody knows for sure what the Fed is going to do. They don't know how what the Fed does is going to affect their portfolio. They don't really know what's going to happen to inflation. They don't really know what's going to happen to interest rates. And everybody's wondering, what should I do? And today we're going to talk about what you should do to help answer those questions for people when it comes to your existing clients, retaining them, your existing clients, growing them. That's the first 2 points. We're going to focus on the most important thing, your clients. Then we'll talk about new relationships that you can take on, growing through those. And we're going to share examples of content that actually performs in all these categories and answer some questions for you through Q&A. The very first point we want to talk about is actually going to be Sean's. And it's about how you're showing up right now and how it's a differentiator. So Sean, I'm going to give you the floor for a few minutes here.
Yeah, I think the first thing I'd say is reiterating your point. Hey, we're not in an 11.5-year bull market anymore. Don't take your current customers for granted. One of my favorite movies is Jerry Maguire, and you guys probably, many of you remember the scene where Rod Tidwell, Jerry's client, and he had a wonderful emotional embrace after a big NFL long-term contract was signed. And you pan over to the villain, Bob Sugar on the right, who's standing with his client, and his client basically says, I want a relationship like that. Why can't we have a relationship like that? I think this is what advisors aspire to, is having this kind of relationship, which not only makes you feel good, but it justifies the 0.75% or 1% fees that you're charging, right? So once you've got this Jerry Maguire, Rod Tidwell relationship in place, I think you have two approaches to monetize that relationship further. You can take a passive approach, which is honestly what most people do. They say, I don't feel entirely comfortable asking for referrals. I'm going to let the dinner parties that Sean Brown goes to work themselves out. And I'm going to grow my practice through more of a passive approach and say, you know, if they find me, I'm happy to talk to them. But if they don't, I haven't imposed on anybody. I think a much better approach is being active in how you approach things. And that could be in asking for referrals and doing all the things associated with case studies and stuff while staying compliant with the SEC marketing rule. But the thing we're seeing at YCharts, that's the common denominator for people who are doing a great job communicating with their current clients, are 4 things. 1, commit to a cadence. Whether you're broadcasting information or narrowcasting to one customer, have a cadence of weekly, monthly, quarterly, have a cadence in place. Number 2 is find a lot of different touch points. It doesn't always have to be about, hey, I know it's your birthday. Here's your birthday thing. Here's an interesting article. Or I know you and your spouse asked about FANG stocks or wanted to know how IPOs do. Find multiple touch points to your client. One of my favorite lines from the book Animal Farm was, all animals are created equal, just some animals are created more equal than others. It's the same thing with clients. Not all of your clients are of the same monetary or strategic value to you. So think about the different approaches you're going to take. To all of them are valuable. Some are more valuable. Some you're serving champagne and giving champagne-like service to. Some you're just treating really well and giving them sparkling water. And then finally, know your clients' why. It's not enough to just say they need to have a nest egg of X size in the future. Really know why they exist today and what their goals are in their life going forward. That's what we see for successful advisors who are talking to their customers. So real quick, we did a study, and it's amazing, Robert, how parallel our study was to your study. We did a study of 700 advised individuals, and happy to provide all of this after to anybody interested. But to give you the nutshell of this slide, almost exactly mathematically concurs with what Robert said, which is 50% or so of advised individuals wish their advisor communicated with them more. And if you go down to the bottom, those with more money, the higher net worth, are saying, I'm more dissatisfied with the communication I'm seeing than those with a lesser nest egg. And those that are older are saying it even more. So the big theme, and Robert and I have both reiterated in our study, communication needs to be stepped up. It's not a bull market anymore. And the last thing I'd say is, okay, what channels are most effective? In the study we did, what came out was a resounding endorsement of email. So I'd say there are other mechanisms, of course. The preferred and best one, almost 3/4 of people said email's the best one. And Robert, I'll probably turn it over to you and say email marketing is hugely important.
Yeah, there's no doubt about it. And I'm going to go back to specific practices we used between 2007 and 2009. And one of the things that was most effective was related to email, but it wasn't just email, because an email is text. People can't feel your emotions, see your facial expressions, feel the same level of connection that they feel when they actually see you and sit in front of you. And sometimes because we wanted to reach out to all of our clients, but we knew it was impossible. We couldn't meet with everybody every time something material happened that we wanted to address. That's when we really started investing in video. And this point about email absolutely is still the most powerful channel. All of our data shows that it's the most open, most responded to channel. But we did something really interesting when we started putting videos in the emails. And so even back in that period, when we picked this up in 2007, we never stopped. But we would record a video every single month. And that video would address all the points of concern at the time. What was happening in the markets? What was happening in the economy? What was happening with the pigs? I'm sure you guys all remember the pigs. We would address those things, and we would do it in a minute or two tops. So it was very digestible, and so that our clients could watch it, so our prospects could watch it. We were repurposing by making one video. We were providing thought leadership to prospects who might come to us, and we were providing reassurance for our clients. At Snappy Kraken, when we do this and we compare the data on emails with text only versus video, it's 176% higher. Now, the way that we execute on video today is far better than what I was able to do, 15 years ago. We actually now, instead of just sending a link to a video in an email, we actually put the video on a landing page. And on that page, with the video, there's a topic above that explains what the video is about. Down below, there's a little form where people can submit their questions. And it says, have a question about this video, submit it here. We send out that video, but we also post to social media automatically. So when we do a new video now, it goes on a landing page where people can submit questions. Those become leads or door openers with clients to have conversations. And then automatically it's promoted to social media and it's promoted to email or by email. This makes the process very simple because we actually give you a script. You do it once a month. You record that video, you send it out. You can literally launch it in 5 minutes. It's going to go out on social media to all your clients and all your prospects. And the results are astounding. Now, some advisors refuse to do this. They won't go buy the lighting. They won't get a camera. They do not want to do it. I urge you, please, to rethink that. It's not difficult. If you can talk to somebody in person, you can talk into a camera. You just pretend that lens is their eyes. That's it. You look them right in the eye and you say what you're going to say like you're saying it to a client. But if you can't do that, to Sean's point, email by itself is still the most powerful channel for reaching them. We also use text message. Text messages open faster. It's read at a higher rate, but it can be annoying. You got to use it more sparingly. You got to be careful about how you use text messages. But if you, every 2 weeks is really, even every week is how you keep that open rate high, the engagement high. So you can vary the topics. We produce a different timely email every week or two on these current relevant topics. And relevance is really the key to all of this. If you start doing this, as much as it might take a little extra work, you are going to get amazing responses from clients and prospects. I promise you. These are real responses that advisors have shared with us from their clients that they are emailing every week or two. Not once a month. That's not enough. Not in a time like this. You want to over communicate. This is actually my favorite. This is a year ago when an advisor sent an email during COVID. This client saved it. And the personal note they sent their advisor, you can see, you sent out a memo on June 14th. The subject read, "Why it's going to be okay." Look at this. I pull it out to review it from time to time to find a measure of hope, which I can always count on from you. What can you possibly ask for as an advisor than your clients looking to you for that reassurance, for that hope? That's what's going to keep them with you, and that's what's going to keep them invested. Now, that's about keeping your clients. We distilled it. It's pretty simple. Email them regularly. Send them videos if you can. Do it at least twice a month. Once a week if you can. It's really that simple. What you're doing is you're scaling relationship building. That's all you're doing. It's relationship building at scale. You're scaling your advice. You're scaling the ability to be in front of your clients that you can't do face-to-face in person because they're seeing your face, they're hearing your voice, they're being reassured by you. But it's not just the time to take care of your clients. This is an excellent time to also grow through existing clients. I would argue it's the best time. And we're going to dive into some specific methods for doing that. The first and number one way that we were able to grow through the recession, the number one way was with client events. Now, the reason this spurred so much growth is because of the type of client events we held. We did things that were social in nature, that people wanted to come to, that also saved their pocketbook and their friends' pocketbooks. So when people become a little more conservative in their spending, you give them an opportunity for some free, good old-fashioned entertainment or recreation, and you'll see it'll go a long way. Hey, you can come and you can bring 2 friends. We did movies in the park. We set up a screen. We did movies. We did picnics. We did charity events. We did polo matches. We did wine tastings. We did a wine tasting at our office every single month. And we would invite clients to come and they could bring a guest and we would sample good wines and they would get free wine and free cheese and crackers. And it was right before dinner. We would always do it at like 4:30. They could come 4:30 to 5:30, go grab an early dinner. We were the pre-dinner drinks and entertainment. They could come, they could bring a friend. Everybody who came with a friend also got a bottle of wine to take home. That's how they were rewarded. And they didn't have a 14% drawdown. All they did was bring a friend to the wine tasting. We did the same thing with golf. We would have a golf outing. We would go to the local country club. We would say, we are going to buy you out for the day. We would let our clients bring 2 friends to round out their foursome. We would stay on 1 hole. Every time the clients played through, they were with 2 friends. We stayed at that hole. We would tee off with them. We got to meet every group of friends with the clients. So the clients would come, show up at the hole, hug us, thank us, introduce us to their friends. We would tee off together. The next couple would come. We're able to meet 30, 40 new people in a day, just like that. Now, you might say, oh man, I can't afford this. This is expensive. You know, picking up a round of golf for somebody, it's $50, but I got news for you. You send out seminar invitations and you buy dinners, you're going to spend a lot more per head. So this is cheaper because you don't have to spend $7,000 to mail invitations. But here's the kicker. It can't just be for fun. If it's just for fun, you'll spend a lot of money. You won't get a lot of return. You also have to demonstrate your credibility somehow at these events. Now, here's the way we would do it. And I'm going to have Sean give you some examples in a moment. At these events, we would always stand up and spend 5 minutes, not long, 5, 10 tops, either at the wine tasting, you know, clink the glass. Hello, everybody. Thank you for coming. I know a lot of people are concerned about the economy and the markets right now. You came here to drink wine. We're not going to take a lot of your time, but I want to give you a quick update on what's happening with the Fed and how it could affect your accounts. And you share something educational. You share something enlightening. At the golf outing, do the same thing. We would, after we played, we're all having lunch. Hello, everybody. Hope you had a good game. Here's the winners for today. Give out free golf balls. Wholesalers provide them. By the way, while you're eating lunch, I know you have a question about X. You talk about it for 5 or 10 minutes. We would always have a few really insightful charts or visuals. They'd go a long way. We'd pull them up on the screen and we'd talk to them. See, when there's uncertainty, people love data. They want data more than ever because it's like, okay, I can hear this guy talk about something, but is it believable? Maybe, maybe not. Now you share what you're going to share, but you pull up the data, the dynamic changes, the whole conversation, your credibility goes up. So Sean's going to share some examples of the types of slides that we would pull up. Advisors, you've probably seen some of these before, but they're great. And remember, clients haven't seen them before. Most prospects haven't seen them before. And if they have, you know what? Nobody probably explained them well what they really mean. So Sean, take us through a few examples. These are just like the types of things we used to put up at events like this and talk to. And Sean, you've got some great ones here.
Yeah, I just, my business is we're in the business of analytics and helping advisors develop the insights, which will help them communicate with their customers. And, you know, I try to pull some real life examples here. So it's not a show and tell on my company's software. So the Ritholtz Group saw a really good piece that anybody could make or borrow with proper attribution in a couple minutes. This is that classic time in the market's more important than timing the market. And I'll give the very quick voiceover because I know everybody really knows what this means. But if your time in the market is a month, you've got a little bit more than a coin flip chance of making a profit. As your time horizon extends, it gets near 100%. On the right, you know, hey, if you do try to time the market, you run the peril of missing the best days. While you're thinking you're waiting, if you miss the best 10 days in the market, your average return will drop by 33%. If you miss the best 20 days in the market, your average return is going to be cut in half. So great example, very quick picture saying, you know, you don't want to time the market, you want to spend time in the market.
Can I say something on this, Sean, real quick? One of the fun things we would always do with data like this is we would create a little trivia out of it where we could. This is the perfect type of thing to do that, because if you say, hey, how many of you think that, or what would you guess is the number of years you have to stay invested in the market historically to get 100% positive returns? And then you let people guess and they'll say, you know, 100 years. And then when they finally realize, well, actually just 5 years, your probability is 83% that you're going to have positive. So it creates some engagement and that can be fun.
You know, the next slide, this was put out by George Marutis, who's an advisor of PMG Wealth, reiterating the theme about careful trying to time the market. If you think you're timing the lows, look what happens the next 6 months after a bear market bottoms, which none of us can predict. On average, the next 6 months return 32% growth, right? Careful not to try to time the market. Guess what? I put some numbers up in front of you. I was credible, and it's statistics and it's math. It can't be argued, but you know that I'm a credible messenger here. Next one, and I love this one, you know, which basically says, if you want to enjoy the peaks in the market, you better be prepared to withstand some valleys. You know, the peaks here, the quick voiceover on this slide is the average bull market lasts 36 months and delivers, you know, 15% per year returns. And the average bear market is about half that duration, about 18 months, and per annum return is negative 22%. If you're going to get spooked at the years when the market goes down, you're not going to be there when the market goes up, and it goes up a lot more often and for a lot longer duration. And that was Goldman Sachs.
Yeah, these are great examples. And, you know, taking something like this and just sharing it at a social event, it's not overwhelming. You're not giving them a 40-slide deck, but a few data points that they can anchor on. You know, Sean mentioned the importance of email earlier. We're talking about visuals. I'd be remiss if I didn't mention Carl Richards' Behavior Gap. Those of you who are not familiar, wrote for the New York Times for many years, created these illustrations. They're very unique, and they really teach important financial concepts. We actually licensed these from Carl, and we have a 52-week series where one of these goes out every week. Perfect supplement to your other marketing strategy. Also, Carl's commentary is provided with them. Another great way to reassure clients. And these can also be used in things like slide decks at events. And Carl has licenses to them on his website. You can actually buy and put them on billboards. And it's good. These types of things, they stick with people. And then they associate them with you. They don't know Carl. We know Carl from the industry. But when you share these things, they know you. And they remember this lesson that you taught them. I love this one in the top right. You know, just these reminders of what really is to be expected. So let's shift gears a little bit to, we're talking about growing through existing client relationships. We just talked about events and using those as a chance to build credibility, educate, and meet new prospects. But let's talk about actually getting referrals. Now, the key, I believe, to a steady stream of referrals, and from my experience, is that you absolutely have to have a practice, a way, a method, a consistent approach. Because if you just leave it up to chance, it's going to be sporadic. But if you do it consistently, however you do it, you will get results. People often don't feel comfortable asking for referrals. Advisors will bring it up. They feel like it's, salesy or whatever. And I respect that. But I think there's a way to do it without being salesy. And this is the way that we used to do it. And I don't think it's salesy at all. And it's focused more on the client and helping the client. Throughout a period of recession or volatility or uncertainty, every single client that comes in and meets with you is an opportunity to get a referral. And it's not wrong to think about that. Your business grows because of referrals. And if you're serving your clients well, you shouldn't be ashamed to ask them to support your business in that way. But it's better if you are able to flip the script and make it a gift for them, make it something to help them, make them feel like you are actually helping them in a special way. So this is designed for that purpose. Whenever a client comes in for a meeting and you've just helped them, always wait until you've helped them with their problem. Wait until you've reviewed their portfolio. Wait until you've analyzed their risk. Wait until you're at a point where they say thank you. That's what should trigger it. If a client says thank you, that should make you immediately think referral opportunity. That's the best mental association you can have because they've just thanked you. That means they're feeling appreciative at that moment. So what can you do? You can say, absolutely, it's my pleasure. I'm so happy to be able to serve you. I'm so glad we've been able to help you. I'm glad you're comfortable with the plan we've put in place for you. Something like that. And then you say, but actually we see a lot of people who are not doing this type of planning. You wouldn't believe the things I see when people come in my office. The investments they're in, the risk they're taking, the service they're not getting from their advisors that they need. It's really a shame. And that's why every single week, with everything going on in the markets right now in the economy, I always leave spots open in my calendar for the people who are important to my best clients, the friends and family of my best clients. So I just want you to know, if there's anybody that you think could be in a situation where they're not getting this kind of help, I'm here for them. Because if they're important to you, they're important to me. Is there anybody you can think of that would benefit from that? Ask the question. Let it hang out there. Don't get uncomfortable. It's a fair question. You're offering to help people they care about. And if you do this every single time, you'll get one of three things. They'll either say, no, I can't think of anybody. And they'll be like, he just wants a referral. And they'll move on. It's okay. That's the worst case scenario. Or they'll say, you know what? I can't think of anybody, but I'll keep it in mind. Great. Now you're on their mind. Best case scenario, they'll say, you know what? Actually, yeah. My neighbor was just telling me that he lost 14% of his portfolio and all his advisor did was send him a bottle of wine. And then you'll get the referral. So this is a way to ensure that you have a process. Remember, people say thank you. You think referral opportunity. Then you offer to help the people they love.
Hey, Robert.
So these are... Oh, yeah, go ahead, John.
Sorry to interrupt. I just want to, we use this in our business. And we wait until kind of renewal time or some event. And we wait for an event and we wait for the thank you. I'm going to renew. And we do this exact thing in our business and it works beautifully.
Yeah. No, thank you. You don't have to apologize for interrupting. This is both of us. So you can interrupt me anytime. So we've talked about taking care of clients. We've talked about growing through clients 2 ways: events, asking for referrals consistently in this way. Now let's talk about new relationships, because there are a lot of people out there. Remember our data from the very beginning, 52% said they would change an advisor. Everybody's wondering, what should I do? This is your opportunity to be out there as the person who's ready to answer their questions, the one who's going to be more proactive, the one who's going to be more visible, more vocal than their current advisor. And that awareness, that being top of mind like that, is what's going to lead to these opportunities for you. And in times like this, the things you need to be out there saying change from a bull market. It's a different message. And actually, Sean's got some fascinating data that proves that. Sean, would you please explain what you found here?
Yeah, we did an identical survey of advised individuals. Again, about 700 people each time. They are the clients of advisors. And they told us in 2019, they rank ordered the type of communication they wanted to receive. And you see that on the right. You know, I want them to know me. I want them to provide good customer support. I may like to hear a little bit about portfolio performance, but guess what? We're in a bull market. So every time I receive my statement, it's going up. So that's not all that important. You know, referrals, you know, low fees, these are what's important. That changed dramatically in our latest study. Look on the left, 74 to 78 people, depending on the size of their portfolio, wanted to hear about the number one thing that advisors should be focused on, which is portfolio performance. And that doesn't mean you have to show alpha. It means you have to tell me how I'm doing, why I should feel good about that, and how you are mitigating risks, or you are rebalancing the portfolio to be most appropriate to me and my needs. So I would say if you're still in the same mode you were in 3 years ago during an 11.5-year bull market, where you're saying, you know what, I'm just going to ask about the kids and tell them I'm here when they need them, they're probably talking to somebody else or considering somebody else, at least 50% of them, talking to somebody else who may talk a little bit more about investments and performance of returns.
Yeah, staggering. You know what I see here, which is, I hope some of the advisors listening will make this connection as well. Maybe they already have. But if I were to go out and talk to advisors and say, when you're explaining your value, what do you talk about? They would probably jump down here to breadth of services. They talk about all the education they provide, the services they provide. And if I said, what about portfolio performance? They'd be like, no. That's a commodity. We don't really focus on that. And it would be the opposite of what's right here.
Mm-hmm.
And maybe that was working for a while. But right now, in a time like this, when things change, when uncertainty goes up, now is when the conversation has to change. The topic has to change. And actually, I noticed Warda just asked, how do you reach people who currently have an advisor? That's exactly what we're going to talk about, is some of the ways to do that now. So let's first of all acknowledge this point. Sean's data is very powerful here. The whole thing we have to have a mental shift on is that we got to talk about what's important to them, not about what's important to us. Because the timing is everything. So if you can start to say to yourself, when you're doing marketing, when you're out there communicating, what is the thing people want to hear about right now? And then you can shift your focus, what you're talking about, to what they want to hear about, you'll be more successful. Now, we've done that. We've been doing that in all of our content. So for example, when we run a campaign, so we have a lot of lead generation campaigns. They post to social media. You can see an example of this here, right? All the emails go out to your existing prospect list. All the social posts go out on Facebook, LinkedIn, and Twitter. They all lead back to an opt-in place. They have ads for running ads on Facebook, which is very effective if you're able to do that. If you have an agency that can work with you to do that. We provide the ads already. But you're out there, right? You're out there with this content. You're promoting it. In our content, we are talking about portfolio performance. So this is an example. It's from a campaign about retiring in a time of uncertainty. And I just want to highlight a few things in this campaign. This is when somebody opts in, they get the lead magnet, they download it. Some of the questions we ask them. Do I have a retirement plan that incorporates recessions, volatility, and bear markets? Have I tested different portfolio scenarios to determine how much is safe to withdraw? Am I protected against sequence of returns risk and the dangers of withdrawing too much from a portfolio that has lost value? Now, I read those questions to you. You absolutely understand them. You know what sequence of returns risk is. Most consumers have never heard of it. They do not know if their retirement plan incorporates recessions, volatility, and bear markets. They don't know how stress tested it is. They haven't tested different portfolio scenarios. What's the point? When you ask questions that clients don't have answers to, you force them to come to you for the answers. So in the content we produce, what we want to do is we want to talk about risk, talk about portfolio performance, ask questions clients don't have good answers for, and drive them back to you. And that's what our campaigns are designed to do. We've got one for Riskalyze, for people who use Riskalyze. It's all designed to help people analyze their risk, drives them into the questionnaire. We've got one on retirement income for people who want to know if they have enough to last in retirement. We always use, by the way, very different, catchy, out-of-the-box graphics, and that's designed to grab people's attention, pull them in. It's creative. That gets the eyeballs. Here's another example. We just launched this campaign, Your Best Recession Yet. Now, that's interesting because a lot of people have bad experiences from recessions. They think back historically to what happens during a recession. So what do we call out? Hidden opportunities, costly mistakes. We offer the free guide to Your Best Recession Yet. When you are out there, you're putting this in the public eye all the time, you're going to be exposing these messages to people who have advisors that are not exposing these types of messages to them. And they're not getting these questions answered. So you notice right here at the top, this call to action, I don't know if you can see it, it's a little small, but it says, book a free one-on-one recession survival session. Hey, I say that 3 times fast. Recession survival session. Now, if somebody sees that and their advisor hasn't offered them a recession survival session, do you think it's possible they might want to know what that involves and compare what they're getting from their advisor? Absolutely. See, if you're out there with the normal generic, like free consultation, free second opinion, sign up for my newsletter, that's not relevant. It's all about relevance and timing. So one of the things that we used to do in our business, I told you I'd give you some specific examples of that. This is actually a seminar slide. So during 2007 to 2009, we also did a lot of public seminars. I mentioned earlier client events. I love client events. I prefer them. They're warm referrals. The quality of the prospect is higher. However, we also had a lot of success with seminars. If you are interested in that type of investment, it can work. Depends on your area. There's a lot of factors, but the principle applies in every form of marketing. You could make videos about this. You could do a blog post about this. A lot of our content is about this. When people are feeling concerned, when they're worried about the risks, you should be screaming from the rooftops about your risk management process. If I was at chamber mixers or Better Business Bureau meetings or anything like that, as an advisor, if somebody asks me, tell me about what you do, I wouldn't say I'm a financial advisor. I would say, oh, I help people manage risks. What kind of risks? Well, specifically risks to their investments, their portfolios. I help them mitigate those risks. So right now there's a lot of risks. We're facing market risk, inflation risk, concentration risk, liquidity risk. There's actually 7 other kinds of risk as well. People don't even think about. So I help them make sure that we are analyzing all those risks to their investments, to their holdings. Then we figure out how to mitigate those risks. We address them. We either completely avoid them, we transfer them to somebody else where possible, or we mitigate them in another way. And then that's not enough. Risks change. The market environment changes. So we've always got to be able to reassess, modify that, be opportunistic, be thorough, and do that regularly on a consistent process. That's what I do. Now, advisors don't talk like that. People get curious. You have a risk management process. I wonder if my advisor has a risk management process. This is what you have to be out there talking about. Talk about the risks, talk about portfolio performance, talk about the environment, and just do it every single day, whether it's in person, on social media, by video, in emails to your clients and prospects. I recently talked to an advisor who did nothing but go back through all their own personal emails and take everybody they've known over all the years and everybody on social media, build a new email list and start emailing them, talking about these factors. And you know what? They get responses. It may be a few at first, but how many clients do you need to make it really pay off? Now, look, we've talked about a lot of different subjects here. And just to recap, we talked about retaining existing clients, growing through existing clients, growing through new relationships. We shared content examples. But I would be remiss if I didn't give Sean a chance to talk about some really interesting data right now. This has all been sort of principles. Some of it's historical, some of it's things that are working today, but there's also some really interesting things that I think you need to see related to the current environment. And these are things you might want to share with your clients as well. So Sean, would you be willing to share a couple of interesting data points you're seeing right now?
Yeah, absolutely. I think the first one I would talk about is I would first say advisors don't need to have all the answers. They need to be able to communicate that they're aware of the questions and they're happy to share the things they're noodling or the things they are seeing. I think one of the things we see is a lot of times advisors are saying, listen, I am not a macroeconomist and I do not have a crystal ball, therefore I want to say nothing. I would encourage people to rethink that and say, listen, there is an open question out there among any advised individual, and frankly, anybody who pays attention to capital markets, which is, are we still in a bear market? Everybody knows that a bear market is a 20% drawdown, but we've got this interesting, picture here that shows drawdowns that says, are we in right now a bear market mini rally since October of last year? Or are we at the beginning of a new bull market? And I think pictures like this help have a conversation. Nobody is any advisor who says, I know exactly what's going on is probably not an advisor I want to be managing my money. But to say, it's a good question, here's some context for this, let's have a dialogue. Let's have a dialogue that says there's some nice signs that say we may be pulling out of a bear market, but let's talk about how your portfolio is configured and how we have a plan that's going to help us whichever direction the market goes. So I think that's a big one. Another big one is recession. This chart shows in the gray vertical bars, it shows historical recessions. People want to know that their advisor is thinking about recession. And why? Why is recession important? Well, recession as an advised individual, that may impact my job. That may impact the jobs of my children or my colleagues. And when my job's at stake or there's corporate pullbacks, bonuses may be pulled back or my disposable income may drop. And I might want to put that vacation on hold. We all understand why understanding recessions is important. Nobody has a crystal ball, but talking about things like, well, let's look historically around how U.S. consumer sentiment or the inflation rate or the 10-2 yield curve or the recession probability indices. Let's see how they served or didn't serve as leading indicators to prior recessions. So it's these types of things that are just great catalysts for a dialogue. They draw out where is a client sitting in their emotional security and their faith in you, and portraying or sharing a picture like this says, wow, I can sleep well at night. My spouse and I understand. We've got an advisor who seems to be thinking about all the right things, and they're also humble enough to say they don't have all the answers and they don't have a crystal ball.
Yeah, that's good. It's good perspective, Sean. I agree. I think asking the right questions and demonstrating that you're following these things is more important than having the answers. But also it gives you a chance to educate your clients, because like this is, people hear about recession's coming, but what is this? Well, these are leading indicators. So you've got a chance to talk about consumer sentiment and why it's important, and inflation and where it's at versus historical and why that matters. And what does the treasury yield spread have to do with anything? And by the way, when you take all these factors into consideration, what is the probability of a recession here? And oh, look, the risks are higher than they've been historically. So what does that mean for our strategy? Let's talk about how we're going to get defensive, but still be opportunistic. Mm-hmm. And those conversations are enlightening for people. Sometimes we get tired of talking about those things because we say it so many times we feel like it's just common knowledge, but it's not. It's common to advisors, but it's not common to everyone. Yep. Sean, by the way, all these charts you've shared today, a lot of them are really useful. I know that they're just a sampling of some of the things that YCharts really empowers advisors to do. If people want to get access to these or other charts, what's the best thing for them to do?
Yeah, if people come to YCharts.com, I'll make sure that first of all meeting attendees, we'll make sure to send out this deck. Anybody who wants the underlying source so that they can use on their own and put their own logo on. We'll make sure to include an email address for me and YCharts, and we're happy to give it to you.
Oh, that's awesome. Yeah, thank you, Sean. So we got a lot of great questions. We're going to take those in just a minute. But before we do, I want to conclude with a couple of quick things. We've talked about a lot of different tactics today. Referral tactics, client event marketing, public marketing and social media, video. They're just individual things. They aren't complete. And sometimes advisors will get hung up on one thing. Like I saw one of the questions come through. It's a good question. Dean asked, do you not think texting is becoming the more important communication medium? And my answer is texting is an important communication medium. It is not the only one. And what's important to one person will vary to another. So you have clients who would prefer to text you. You have clients who prefer to get emails and never be texted by you. And that's where you really need a complete system. And so we, over the years, from my own time in business, running marketing at practices, all the work we've done for the thousands of Snappy Kraken advisors, we've really built a complete system. So you've got client onboarding resources to deepen relationships and newsletters and timely emails, quarterly reviews for the clients. And it goes all the way down to the very foundation of your website and your SEO, how you get noticed. Somebody asked earlier, how do I get noticed? Well, people are searching for things. They're asking questions online. If those questions are worked into your SEO strategy, you're going to have more website traffic. There's going to be more opportunities for them to opt in, to start a dialogue. So you really do need a complete strategy. If you leave this webinar today and you take up one of the ideas that was put forward and you use it, your business will improve. But if you have a complete strategy, it will improve exponentially. And so without getting too salesy here, I do want to just let you know, like, this is the business we're in. We have a program. It's called Freedom 360. We do it all for you. We build your website. We optimize it for SEO. We put the lead capture mechanisms on your site. We put the nurturing sequences in place after people opt in to drive them to the appointment with you. Monthly, we launch campaigns for you every single month, newsletters, visual insights, market insights, add blog posts to your website. So we do all this for you as part of this program. And right now with this webinar, there's also $500 off the setup fee and reduction in the monthly pricing. So something for you to think about. If you're interested, go to snappykraken.com. But let's get away from that for a minute. Let's recap. What do we cover? What are the takeaways here? Stay extra visible right now. Email and video. Host events. Have your clients come and bring guests. Make it something they'll want to bring their guests to. And at those events, take 5 minutes to provide some educational, market, and economic insights. And YCharts already give you some great examples. At every single meeting, every time a client says thank you, offer to help their loved ones with the service you provide. Make your public marketing about portfolio risk, mitigation, portfolio performance. Don't be afraid to talk about that. And if you can't do all this, hire somebody to do it for you, but do it. These strategies work, and it will be the difference between a flat business or a shrinking business or a dramatically growing business. Now, at this time, we will take your questions. And while we do, I'm just going to throw this up on the screen. If you like learning about marketing, May 3 through 5, we have the financial industry's primary only financial advisor marketing conference being hosted in Las Vegas. Here is a code to get 30% off your attendance. YCharts will be there. Snappy Kraken will be there. You can talk to us more in person. So feel free to take that code and join us. We'd love to have you. So let's answer a few of these questions we've got, Sean. This is one for you. It's about the data. So they're asking how to interpret this data, because it says, would you help us understand the percent of how clients prefer to receive information, since the numbers add up to more than 100%?
Yeah, we recognize the fact that everyone does multi-channel marketing, and this was saying, which of the following channels do you use, or would you like your advisor to use? Select as many as apply to you. So the numbers exceed 100%. Absolutely. The most popular choice was email.
Yeah, good question. Sean, I don't know if this one's for you or me, so we'll both answer it. Somebody's asking if you have a relationship with United Planners. corporation?
We do not have a formal relationship with them associated with our software. No, they are. We have several United Planners advisors, but we do not have a formal relationship.
Yep. And unfortunately, I don't know. We're approved at over 60 broker dealers, and I just don't have that offhand. But if you reach out to our team by email or when we respond to you, someone will be able to let you know that for sure. Julian, thank you for raising your hand. We're not going to take audio questions just because of the risk of somebody saying something offhand, profane, but please do go ahead and type your answer or your question rather in, and we'll answer it. Let's see. We finished that question. For our clients, would it be crazy to send a survey to each one asking them what is important to them? Do you offer this? Or do we send things out that we just think are important to them? Our clients are a small, unique sample size that could change the results. Okay, so this is tricky because once you ask your clients what they want, you better not send them something they didn't ask for. So that does get a little tricky. If you have the ability to manage all of that and create different content for different clients, and that's wonderful. What we do is we do that on a massive scale. We like that study I shared with you of high net worth investors, which by the way is available on our website. We ask people a lot of questions. What do they want to hear about? What are they afraid of? What makes them nervous right now? What questions do they have? And then we build all of our content around the results of those surveys and the top most popular interests. So we do that on a massive scale. We actually have 2 million investors in our database that advisors have either captured or uploaded. We look at their traffic and behavior trends when they visit our content, and that helps us determine what to create. So by using the content we provide, you're going to generally have a good representation of what the vast majority is interested in. And then you give clients the ability to unsubscribe from certain types of communications. That seems to be the simplest. But surveying is never a bad idea. I think you just have to be very careful about the types of questions you ask to avoid compliance issues, complaints, what could be perceived as a complaint by a regulator, and or opening up Pandora's box like in the example I just mentioned. Kevin, thank you. Got your request, and absolutely we will provide you with the slides. Everybody will be provided with this afterward. I think this is for you, Sean. Brian asked if the charts are pre-built so they can produce them with a click and share them.
Yeah, we have libraries of pre-built charts on all kinds of things, including the ones I showed. So subscribers to YCharts can come in and check the pre-canned library, and they can make adjustments to them saying, hey, I want to take out this thing and add another one. But yes, we have full libraries that are available for subscribers.
Okay. David asks, can you recommend a generalized nurture sequence, not in terms of content, but in terms of frequency? And how long do you keep a prospect on the list? So what we've created, David, that's been working very well is a 8-week nurturing sequence. It consists of 7 emails from the advisor to the prospect that's opted in. And in the 8th week, it's a video message. That campaign is what we put all prospects through. But at the end of that, if they don't convert, which those emails are designed to convert, if they don't convert, it means it's not the right time. So at that point, we put them into a general prospect pool where now they'll get like monthly communications, key communications that you would send out to all your prospects. So you never stop nurturing them. You never know when the right time will be. We have advisors who've had people on their list for years before they finally convert. So that never stops. But we take them off of that active nurturing sequence after 8 weeks. Because think about it, if you're a prospect, you've opted in, and the advisor sends you a personal message every week for 7 weeks, you don't respond. And they send you a video and you don't respond, like that's enough, right? So now it's the general stuff. By the way, reach out to us if you want to see an example of what that looks like. Happy to provide. Let's see. Ryan, is Snappy Kraken approved by LPL and part of their vendor program? Ryan, I think we're really, really close. So call LPL and tell them you want us, because we've been working on that process for a while. The gears move slowly over there, as you know, but I do think we're close. Let's see. Robert, if your firm only targets high net worth individuals, how will that change if lower income family members or friends are recommended? Ooh, that's a really good question. That's every advisor, right? You get referrals and they're not the right caliber, yeah, that's tricky. So I will answer how we would handle this. Sean, if you have something to add, by all means, feel free. So we made it clear to our clients always that we didn't work for everyone. And we would say that at seminars, client events. That was always part of our 5 or 10 minute script at a social event. Even when people would refer, sometimes we would say, hey, by the way, I just want to mention, we don't work with everyone. We have to make sure it's somebody we can really provide value for, and not everybody fits that profile. So I just want you to know, if it doesn't work out, if this is a person we cannot help, I just don't want you to take it personal. I will let you know we were not able to help them, but we will certainly also try to connect them with an advisor who can help them. We're just not equipped to help every person. You understand that. We specialize in helping people with situations like yours. So that people understand that. You don't have to say, if they don't have enough money, I'm not going to work with them. But if you can't help them, that's really the differentiating factor. And people appreciate that. And I will say, the work of following up on every referral you get and saying, by the way, thank you for that referral. I want to let you know how it worked out. They're a client now, or they're not because we couldn't help them. People will appreciate that, and that will prompt them to give you more referrals.
Yeah.
Anything to add there, Sean?
No, I think, the answer shouldn't be no. It should be, here's how I can put you in touch with somebody who can help you if the answer needs to be a no.
Yeah.
Hey, I see a couple here I was hoping to tackle. I did a poor job of explaining YCharts is the letter Y and then the word charts. And you could see that. And I would offer, Robert, I'm throwing a little bit of curveball here. Some people are asking about pricing. Hey, I'm happy to extend a 20% discount to anybody who sends a note to Sean@YCharts.com and reaches out. I'll make sure you get a nice discount on our software.
All right. Glad you did that, Sean. Thank you. Because I was going to just say, there's no way I can get through this list. It's the top of the hour. I have another meeting I have to go, unfortunately, but thank you all so much for attending. Our team will reach out to try to answer the rest of your questions. Sean, thank you so much for joining us. It was a delight to have you as a guest today. And to all of you, I hope you weather this recession with great success, and that you, more than weather it, you really thrive through it. Have a great day.